Okay, we're just getting set up here.
Yep.
All right.
All right.
Did you close out all your positions this morning?
Yeah, I'm out of everything.
Very cool. How'd the day go?
Yeah, we're up a bit. Oh, not a fantastic day, but we're up.
Always fun.
Yeah.
All right, just give me 1 minute here. We're just getting set up here.
Yep.
All right.
All right.
And we're live.
What's going on, guys?
Hello, everyone.
Everyone's doing all right? We got some couple cool stocks to look at today. INTC, BYND, and CHK. Let me just actually open up Thinkorswim here. Let us know which stocks you guys are trading right now. And if you guys like these videos, feel free to subscribe and give it a thumbs up. It really helps us grow the channel.
Subscribe to me. Subscribe now.
Okay.
Okay, let's hop into this, man.
Yeah, let's do it. Okay, so we'll start off with just like an overview of the market, I guess, right now. So first thing I noticed is that realized volatility is still outpacing implied. This is given by our variance risk premium number right here, and that just tells us basically, a broad sense, like should we be leaning long volatility or short volatility? So we'll start off with looking at INTC. They had earnings last night. They did okay, but they reduced their guidance. So the stock didn't move too much. It moved, it's only down 3% right now. And if we look at the earnings trader tab, see that a second to load up, you'll see that it's pretty much in line, right? The average move, so yesterday it was implying, I think it was a 5.5% move. The average move is 3.5%. So it's pretty much in line with what it's done on average, right? And you can see that by the blue lines here, right? So, the last 2 quarters were just above 5% for their earnings, and today it's 3% in line. So nothing too out of the ordinary there. And something else about INTC was that selling. If we look at the chart right here, selling options around the earnings event does pretty well, because if you see buying options does not so good, right? This is if we bought the straddle before the earnings event, and so taking the other side and selling those options would not have been too bad of an idea. The one issue is that the implied move wasn't big enough for us to justify a short here. We thought it was fairly priced. Another thing we actually noticed is that the Q2 for INTC is the lowest. So we actually see the smallest moves happen in Q2. In terms of, there's obviously a lot of relative action going on here, right? People are buying up the options like crazy right now, or trading options.
Yeah, it's
like
pretty
crazy.
popular.
So something we notice is that implied volatility right now is still pretty expensive. Right, you can go ahead and short these options right now, and hopefully collect a little bit of a spread there.
How come?
Just like, so when you have a lot of attention around a stock, you're obviously going to have a lot of people coming in buying up options, and so
Yeah.
it seems like people are still leaning towards buying options rather than selling them right now.
Do you think Do you think this could be a drift from the earnings event? Like people, when there's a lot of eyes, right? Like something that people forget, I think, and this, if you look at like the S&P stock and stuff, it's obviously like not true. But when you get into these types of companies and you get into the option space, when there's enough retail eyes on something, they can actually move the market.
Yeah.
Right. So, what I'm thinking here is like, if you look at it, it's one of the most trending things on StockTwits right now, for example. Lots of eyes. Lots of people buying this stuff. And that's why you see this relative action so high. It's not funds driving this. It's not insiders driving this. The odds are that this is the retail trader driving this.
Yeah. I mean,
so we need to we need to think about that. Like what could be driving this increase in volatility? Because there's always two things, right? It's, can we find an inefficiency, and then can we explain it? Right? Without a thorough explanation of why it's happening, we don't, that opens it up to like, is it insider? Right? Is there someone out there who knows something that we don't?
I mean, and look at, you remember yesterday on our live, we talked about selling INO volatility, selling the INO 13 straddle, right, for $4.20. And this morning it's $2.95, right? And the reason why, huge, it was a great short opportunity. And, the reason was because of all this retail, coming into the market and driving up the price of the options, right? So like, these are the opportunities that we have to find.
Mm-hmm.
And INTC, it's not too out of line. Like, INO was really out of line, but INTC, let's go back to it here. It's not that out of line at all, right? It might be a little bit expensive here, but if we look at the 0-day option, the option's expiring today. Let's go at the money. You know, 78 cents. I mean, there's not much meat on the bones left here. Maybe for the let's see, 41% for the 42%. Yeah, I mean, like, you guys might be able to get away with selling the further out options and having the vol commit a little bit. But there's not too much meat on the bones left on this trade.
Yeah, it's coming to the end of its time, eh?
It's coming to the end of the cycle.
Okay, but then why are we seeing such a high number of eyes on it too? Is no one taking action? Would that be what it is, or everyone has positions already?
Yeah, it's it could be that there is a lot of selling coming in, and that's pushing it down to somewhat a fair price. Like, it hasn't collapsed fully, but there is, like, you're having all this retail come in, but you might have these more sophisticated guys coming in and bringing the market back down to where it should be.
Okay, cool. So overall opinion on INTC right now?
Overall opinion, I don't have a directional opinion. And in terms of implied volatility versus realized, the edge is not too big. So it's just a trade I wouldn't take.
Yeah. So even though there's a lot of eyes on it, look somewhere else. There's more trades. There's more opportunities. And like, I left a comment in the chat box. Guys, if you have a trade you want us to analyze, we will do it for you now. There are 7 people watching this stream. Nobody has access to this kind of information. So take advantage of it. Ask us the stock you want us to look at. Let us know what trade you're thinking of, right? There's a million opportunities out there. You might as well make sure if the one you're looking at is worth taking or not. Okay, in that case, you want to move on to the next trade, Beyond Meat?
Yeah. Hey, so how'd you find this one?
I just found it by looking on stock. I looked at what's trending, right?
Wow.
Like something that I've been a fan of for the last little bit is look at what's trending. Go into the tool, see what the tool's saying, right? Go into our terminal. Let's look at the data. Everyone else is stuck looking at the charts. Let's see if we can find an edge that not everyone else has access to, right? And when you know that you're not competing against, the big dogs, you're competing against just average traders. Most people have no idea what this type of thing even exists. So it's a huge edge when I know that I'm playing against them. Yeah.
I mean, there was a guy that I think got commented on our YouTube channel saying, like, we were lost. We were lost in the sauce. So as long as we have, like, those people on the other side of our trade, we're going to be doing very well. All right, so let's take a look at BYND here. The implied volatility is way higher than our forecast. It's much higher.
Yeah, way higher.
So what happened was BYND actually got like $150 million in financing, and then an extra $200 million secured if they need it.
I think they also had like a partnership with Starbucks come out.
Yeah,
There's been a lot of news happening around this company right now.
And people are bullish, man. Look at this. Like, people are driving up the demand for calls.
Yeah, you want to explain that to people? Because, like we have a couple of new guys here, like Mohammed, someone from our Instagram who's been chatting with us a bit. So just because he's probably not seen something like this before. So if you can explain what that skew graph is and how we're using it right now to try and understand the sentiment in the market.
Yeah. So this basically means that investors think the volatilities to the upside, right? They think they have a bullish direction on BYND, right? They're willing to overpay for the calls relative to the puts. And that's what this skew graph tells us. It tells us where's the demand for options right now.
Exactly. And because remember, like when there's high demand, right, it's usually outpacing the supply, which drives up the price. So what we're seeing here is there's so much demand for calls on this trade on BYND that they're willing to pay more than what fair value is or what the at the money value is.
And you can see here, like, the stock splits community is 85% bullish, right? Investors are pretty bullish right now. And that is explained in the skew. We can also, let's see how it has looked historically, right? You can see just basically how investors react here is that over the last 2 weeks, right, we've seen investors get more and more and more bullish, right? They're willing to overpay for the calls. Just like we see here, right? In the last 2 weeks, we see investors getting more and more bullish. So, but the thing is though, it looks like it's the retail that's getting more and more bullish, right? It's what we call the dumb money that is getting more bullish, not the actually sophisticated traders. So this could be a good opportunity to be, like, the thing is, retail traders can be very irrational for a long period of time. So BYND could continue to trend up, right? We saw what happened to Zoom, right? We see that they can really push a company if they wanted to. And so it's hard to be directly fading them. But what you can do is set up cheap directional trades to put your view on the market based on what they are giving you, right? They're giving you really expensive calls. So you can sell those, maybe buy a closer at the money call, right? And capture that spread. Sean, you look confused there. Is there someone asking a good question?
We actually do have a few questions there. Just a few stocks that people want us to look at. But I was just setting up something on our video. Our video was getting a little wonky, so got it fixed.
Okay, cool. So let's see if I think BYND does have earnings coming up. If they do, next month though, in 2 weeks.
Yeah, that's a little far out.
A little far out. Yeah.
Like it's obviously priced into the longer dated options, but in terms of like what's driving this demand right now, it doesn't play a role.
Right. Looks
very
good.
cool. So how would you what trade would you recommend? Like you know, so just to be clear, guys. So one of the things is we rarely are actually taking a directional bet, like a heavy directional bet, because the reality is that options are priced based on volatility. So it's not just about what direction a stock moves; it's about how much is the stock going to move. Think about it. When you buy an option, you pay a premium, right? So if you have $100 stock and you pay a $5 premium for the option, for a call option, you're not just betting on it going up. You're betting on it going up more than $5, which is 5%. So options are usually priced in terms of that, and that's how they're looked at. So if we were to structure a trade on this, we probably wouldn't just be taking a directional bet. We'd be structuring it so that we can collect the premium that people are paying for it and then not have to pay out as much in the future, because it's not going to move as much as what everyone thinks.
Exactly. So check this out, Sean. So the implied volatility is about 130% for 1 week out. Okay, so
wow.
The market's basically saying this thing's going to move about 8% a day on average. It has been actually moving that. It has been moving quite a bit, right? We got a 11% change today. It looks like another 11% change yesterday. But other than that, we're back at the 4 or 5% changes. So does 8% a day seem really reasonable here? I mean, it seems a little expensive, right? And that's what our model is saying, right? Our model is saying, hey, look, the implied is 110, the forecast is only 61. There might be a little bit of an edge here, and I think there is. I think selling the at the money straddle is a good trade. It's pretty expensive. So, we could sell the 110 1 week out straddle for almost $17, right? $16.70. And I think this is a good trade.
Yeah, and the bet is that the implied volatility comes down.
Exactly, or it outpaces realized volatility.
Mm-hmm.
But there is call skew. So if you guys want, I guess
you can add direction.
Yeah, most of our viewers, just by the shape of the curve and stock splits, most of our viewers are going to be bullish on this stock. So why don't we structure a bullish trade for them?
Okay.
Okay, so we could do what we call an unbalanced butterfly here to capture the skew and direction. Okay, so look at this trade. So we do the 110. Let's do the 125. Or we'll do the one. There's no real options here, right? Okay, we'll do the 120 and we'll do the 125. So this is only going to cost you $1.19. So here's the trade. Okay. And you can see here that our risk is only $1, right? And our potential reward is going to be $9, right? So we're getting an 8-to-1 risk reward here. That's huge, right? And you can see by like, even if the stock gap moves up past our strike, look at this. Look, the purple line is where we're making money, right? We are making money all the way until 136, 137. You know, so this is a really good trade. In fact,
so Mohammed's asking if there's a way he can structure a trade with the stock rather than the options, because his brokerage doesn't offer the option trading.
Yes. I'm gonna place this trade right here on the live. Gotta get this going. Whipped out my phone. Okay, so you want to get long here, right? Is that the direction you want?
Yeah, I would assume that he wants to get long.
Okay, so
you can just buy the stock.
Just buy the stock. Yep. But the thing is,
straight up buy it.
Yep. Don't forget, you're gonna have a lot of downside risk. So structure it that your risk is in check.
Yeah. So make sure you know what you're willing to risk when you go into the trade.
Yeah.
If the stock goes down, let's say you just say 5%, you're out. Don't hold on hoping that it comes back. Go in with a well-structured trade. Know that if it drops down by 4 or 5% or whatever you set for yourself, that you're out. Don't it's a bias called loss aversion, where if let's say it gapped down 7%, most traders would actually hold on to it, hoping that it comes back, rather than getting out and sticking to what their plan was.
Exactly.
And it actually ends up biting people in the ass most times, because you end up in a position where now it keeps dropping and you're like, oh shoot, what do I do? And that's not a fun place to be. That's the stuff that trading nightmares are made of.
Well said, Sean. Well said. It's know when to get out, know when you're wrong, right? When are you wrong? And
Jordan, are you placing a trade there?
Yeah, it's on my phone here.
Okay, you're gonna have to show it to the camera, man. Show me the filler. It didn't happen.
Filler didn't happen. Here we go. Wait, is my account number on there? No. Okay.
All good?
Yeah, we're good.
All right, let's see it. We got the fill. Let me have a look at that.
Oh no, I'm putting an order in.
Oh, okay, throw that order in, boy.
Yeah.
Okay, look, we got it. We got a few stocks to look at here for some of the guys.
Yeah, let's do it.
If anyone else has anything else they want us to look at, do it. We're gonna blast through these in the next 10 minutes.
Yep.
We do this for a half hour every morning, so
let's do it.
Usman's asking, what about selling an iron condor on Bind?
Yep.
Yeah, good trade.
Great.
Go for it.
Go for it. It's a good trade.
Okay, let's look at EDF.
Okay. We don't have EDF.
Okay,
So
we don't Airbus.
Airbus?
Airbus.
Yeah, we don't have it. What's the ticker?
Oh, here, let me look it up.
Ticker
is AIR.
AIR. Yeah, so we don't have that. We only look at 1,400 of the most liquid equities. So if it's like a penny stock, we won't look at it. We won't cover it.
Here, wait. It's actually kind of strange that we don't have AIR.
They're not penny stock?
Oh, here, wait 1 second.
Okay.
ISIN.
No, these are what stocks are these? We cover 1,400 of the most liquid, so I don't know why we wouldn't have that.
I don't know, dude. Really weird.
But it's not even a ticker on here. It's not even a ticker on. It's ISIN is not a ticker.
Wait 1 second. Airbus. Okay, let's move on.
There's
sorry about that.
Yeah, sorry about that, guys. We don't cover these. But it looks like ISIN is not a stock.
Oh, they're European stocks. That's why.
Gotcha.
Okay. So we look at US based stocks.
Yeah, we cover 1,428 of the most liquid US equities.
Hey, so Inland Empire Trading, we did our INTC review at the start of this live, so we've gone through it. But basically, the position that we're taking is most of the edge has dried up. So like our view is that it's not a trade we would actually take. The reason is that there's it's priced relatively fairly, right? So we're looking for inefficiencies that we want to trade. And our view on is that it's fairly priced. So, if you want to buy a call, go buy a call. If you want to buy a put, go buy a put. There's no crazy pricing inefficiency.
Just so you guys know, I got Phil on this trade for $1.10. So if you want to get in on this, it's there. And like, look at the edge here. Like, look at the P&L here, right? This is fantastic. If we're wrong, sure, we lose $1.10, but the payout's great.
Yeah, and just for Inland Empire, if you're looking at a trade, check out our analysis on Bind. We literally just placed a trade live on Bind. Jordan, what was the trade? Directional fly? Yeah,
this is the trade right here. It's the 132. So it's the 110. It's the one on our screen right here, actually. The 110, 120, 125 unbalanced fly. We're capturing skew and we're capturing a little bit of a directional bias here.
Nice.
Yeah.
Okay, let's keep moving here.
Yep, let's do it.
What did Siddharth wanted us to look at lift?
Oops, let's go back to the term. All right. Wow, that's a lot of skew, eh?
Yeah.
Do they have earnings?
Ooh,
no, next week.
Confirmed, but not yet.
Wow, that's a lot of skew, man. Look at this. Everyone is buying puts on this thing. Nobody is buying calls. Is there a reason for that, Siddharth? Look, let's see if we can structure a trade here. So hold on, just before we continue there, it looks like our implied volatility is 30 points higher than our realized volatility. So not only is implied volatility expensive, there's a ton of skew. And you can see that right here, right? We're at near all-time highs. Wow. So what we could do is we could structure a trade expiring before the earnings event. Okay, sorry. So earnings is 2020-05-06. So let's see if we can structure something maybe next week. So you can see, yeah, wow, that's a lot of skew here, right? So maybe we can do something like, let's do this. We could do maybe the 33, 29, and then 27. I think this is going to be a great risk reward trade here. $1.28. Maybe not so much actually.
It's a little heavy.
It's a little heavy. But we can. Are you bearish? If you're bearish, you can structure something really cheap here. You can do. Let's see. Maybe we can look at the 31, 28, and 20. Let's do 26 for 47 cents. That's not bad. A little bit of a broken wing unbalanced.
Yeah.
Yeah, it doesn't look like a bad trade at all. 47 cents.
If you're a little bearish.
If you're a little bearish, yeah, if you're a little bearish, this could be the trade for you.
Yeah, it was actually Siddharth from our group, so he probably is just looking for a volatility play.
Yeah.
But
Yeah, go at the money. Go at the money. And May 5th
Still
it was, right?
decent.
Yeah, so May 5th, you can sell straddle right here or an iron condor. Right?
Okay, let's move on here. A couple more questions. So
Yep.
Usman's asking, what's the better trade here, iron condor or fly on BYND? Depends on your how much edge you want, right?
And directional bet, right? If you want a little bit of a directional bias, you can put it out of the money fly, or if you want to do an at the money iron condor, it's really up to you, right? They both look like they have edge in it. The one thing actually I would say though is that the fly, the wings are going to be pricey, right? Check it out, right?
They're not far enough out.
Yeah, you can't get far enough out, and look at the curvature here, right? You're going to be selling this, and you're going to be buying these.
Yeah, so you need to move a little more out of the money if you want it to be good.
And they don't have the option, the expirations there. So I'm sorry, the strikes, right? The strikes on the call side stop at 130. So you can't really move too far out. I would say, yeah, it might be a little tricky here placing an iron condor because there are not many strikes available.
Okay, let's look at one more here. Usman wanted us to look at BIP. So this will be the last trade we look at unless anyone has something urgent they want us to see. But let's see what we got here.
Okay, so right off the bat, this thing is probably really illiquid, right? Let me just double check. Actually, we got the option.
What tells you that the skew?
The bid-ask spread, but we actually have the option volume right here. Average option volume for BIP. Let's figure that out. So yeah, only 300 options traded. Super illiquid option. That's the first thing. So you're never gonna get a real sense of what's going on here with the options market. Let's see what else. We don't have too much call buying here versus puts, so people are pretty neutral on it. When you're trading like this kind of these stocks have this much illiquidity, you're paying a lot on the bid and the ask, right? You're increasing your transaction cost, so your edge also has to increase, right? Look at this. You know, you're 75 cents on the bid, $1.10 on the ask, right? You're $2.90 on the bid for the puts, $3.90 on the ask. I mean, your transaction costs are gonna increase. Your edge also has to increase. I'm not a big fan of doing any trades here.
Okay, let's look at one more. Boeing. Let's take a look at Boeing here.
So
what we got?
You can just basically see people think there is still some tail risk still left. So those like way out of the money puts are going to be pretty expensive. If you want to sell them, maybe you think like, a lot of time you have to compare your view against the market. So maybe, the market's saying, okay, well, there's a lot of tail risk here. And you're saying, well, there isn't really any tail risk. So you can go ahead and sell some of those options, right? Maybe use those options, those short puts that you just sold to finance some calls. Finance some cheaper calls. In terms of relative action, we're still having a lot of people looking at this option, right? A lot of people are still buying this thing. We're still trading it. And, everything else is pretty in line. Like our skew is pretty flat in terms of besides this option, this is pretty flat. We're getting the volume on the calls and the puts are relatively the same, right? This is our call put ratio. Let's see. We got earnings coming up next week. So implied move is 9.2%. Average move 2.7%. Okay, so you could be selling options here around earnings. Might be not a bad idea, right? Because check this out as well. Buying options sucks around earnings. So you can go ahead and sell them.
I guess earnings are coming up pretty soon, eh?
Yeah, next week.
Okay. So guys, that's what we got for you for today. We're going to be doing this again Monday morning. I hope everyone has a good weekend.
Yep.
And we'll be in touch. Thanks hey, Mohammed, it was good to see you tune in, man. I'm glad you made it. All right. Take it easy, everyone. Shoot us a message on Instagram if you have any questions.
And don't forget to subscribe.
And sub. Always sub.
Yeah, always sub.
I think everyone who's watching right now has subbed. So
perfect.
that's why I was like, I'm not going to say it. All right.